What's going on, traders? In this video, we're going to be teaching you how to safely trade Kodak, ticker symbol KODK, the rest of this week and into next. So Kodak suffered from multiple volatility halts today, about 20 of them. Stock price was up over 500% at certain times of the day, and this is all due to a news catalyst where the president essentially mentioned they would be able to produce generic drugs here in the United States. Now, those headlines are all well and good, and any analyst who repeats them back to you, that's fine, but what we're here to do is ultimately give you some price levels to trade off of. That way you have a plan to go about the rest of the week. So the way we do that, if you've never seen one of these videos, is we'll start off on the weekly time frame, and then we will drill all the way down to the 5-minute time frame. And what this will allow us to do is get a more granular view of some of the price levels and market structure that's been established on such a crazy day. We'll do that first with just price action and volume, and then we'll go back in with indicators to either see if that's confirming or denying the bias that we come up with. Let's see what the weekly says. Starting off on our weekly time frame, what I'm going to do is just map out some key areas of high interest to me. First one being the all-time high up here at $60. Then the next one is going to be the basing area right around here, around $2.50 that we've seen for almost over a year now in this general area of the chart before we were ultimately sent to outer space. Next one that I'm paying attention to is going to be this one in here, simply because we have an area of support in this area and then turn to resistance once and twice as well here. Same thing kind of holds true if we look at this level. It was an area of support in here once, twice, a bunch of times, and then when it broke, it was resistance once, twice, 3 times, and it looks like same thing kind of happened in this area. We had a triple bottom, so 1, 2, 3, and then resistance once, twice, and the last one we'll point out is the previous all-time high. Certainly should act as an area of interest here up around 37.35. So on the daily time frame, pretty interesting to see that these are actually really close to our gap fill figures here, around 1741 and 1217. Not quite exact, but nothing else to really point out on the daily. Zooming into the hourly, we're going to adjust some of these levels just a bit so they're a little more accurate. So we'll bring this one down slightly, and we'll also go back in and add in the lows of Tuesday, which are right around here, around 775, and the gap closes back down around that 253 level. So not much to watch out for there. I think we do want to go ahead and adjust this level down slightly because it looks like we want to take into account the wick of that candle and then the 2 lower wicks there that definitely acted as support. We'll drill down to the 30-minute. So on the 30-minute, again, you can tell it's a good thing we adjusted that down. We have more interaction with that price level around that area. It also looks like we have an area of resistance. If I undo that, boom. So area of resistance up here around 46.43, and then we'll go to the 15 for some more nuanced levels as well, zooming in a bit. It looks like, again, another resistance could be pointed out in this general area around 41.90, 42 if you want to round it up to a whole dollar, was resistance here. Resistance, support, support, and then broke and turned into 1, 2, 3, 4 touch resistance there. So definitely a key area to be paying attention to. This little support zone certainly catches my interest around 30.75. It's a bit of a flush point. I'd say if it breaks, if this red candle continues lower, breaks that flush, I would say very, very clean and snappy move down there to 25.50. And we'll go to the 5-minute as our last time frame to analyze before we really make any decisions on what's kind of going on here. So you can see price is responding really well to all the levels that we've kind of mapped out. There's also this area of resistance we could call in here at 34, the whole dollar just about. You can tell all the touches we've had, and then it ultimately led to this nice breakout. What I want to talk about here on the 5-minute, though, is the fact that we had a parabolic move to the upside with over 20 halts throughout the day. So if you were trading this, if you're buying in at any of this point in here, if you're buying in during any of this price action, then you were ultimately gambling, and I would just highly advise against that. If the stock price reversed at any time, I'm sure some of you actually bought up here around $60 or over 55 and got stuck long holding the bag. So just not a good habit to get into, and I would just advise against it. Another key thing I want to point out as we're looking at the intraday chart is this glaring gap that was ultimately left in one of the last nasty halts to the downside, and what I want to focus on is the fact that we have this gap that remained on the intraday chart, the price essentially came up and filled that gap to the upside. And now what we're starting to see is that gap fill reversals where prices close that gap and then start to back away and fade off in the opposite direction. So that's a bearish sign in terms of a gap fill reversal to the downside, obviously. But what's even more interesting about this, in my opinion, is the fact that we've actually broken our uptrend for the day. So we had an uptrend line in place that could have looked something like this. You can see all the times we touched. So anchor 1, touch 1, 2, 3, 4 is kind of in there, and then 5 in this area as well. And then we broke trend. So right here, we broke trend to the downside. It kind of recovered for a little bit and ultimately broke back down here in the last 15 minutes or so of trading. But what that's done for us is ultimately started a 5-minute downtrend. So we have a downtrend in place now where we have a set of highs, a set of lower highs, and the same goes for our lows. We have a set of lows, set of lower lows, and now lower lows as well. So we're in a 5-minute downtrend, and I think if you're trading this thing, day trading it at least, you're probably watching the 5-minute charts. This is kind of what you want to keep in mind. So I think the trade early on Thursday will be to see whether or not this kind of rubber bands and snaps back up to our downtrend resistance line, in which case I would say it's probably a short at that level. Whether or not you can short this with stock outright, I'm not entirely sure, or you buy puts on it. That's ultimately your decision, but I would be watching for that move off of that resistance trend line because, again, we are in a 5-minute downtrend. Of course, we will go back in now and identify some key indicators to see what's correlating with our analysis and what is not. So having a look at our weekly time frame, I don't think there's really much to talk about here. The Bollinger Bands, we're obviously way overextended to the upside. The CCI is way overextended. Moving averages aren't even in play, and I think the same thing will hold true for our daily. So we'll look at it briefly, but again, nothing really, in play here. Of course, the CCI telling us we're way overextended to the upside, trading around 420 when normally it's range bound between, on a crazy day 200 and on a crazy day to the downside negative 200. So way overextended to the downside. But again, we didn't need the indicator to tell us that. We'll keep dropping it down. We'll go to the let's just go to the 30-minute. On the 30-minute, it looks like things are starting to make a little bit more sense. So in terms of the Bollinger Bands, those are these gray lines here. The middle one is essentially the 20 SMA, and the lower one is the 2 standard deviations to the downside. What I want to point out is that we're now back below our upper Bollinger Band, so things are starting to cool off a little bit. But really, the moving averages aren't even in play yet. The CCI is the next thing I want to focus on in terms of the divergence that's kind of going on here. So in terms of divergence, what I mean is that we have a CCI high here, a price action high here, and then we have our next price action high up here, but the CCI actually went lower. So this is a divergence and something that traders take note of. We have a downtrend in the CCI where we have an extreme uptrend in price action. When those two things aren't correlating, it normally means things are getting overextended and a nasty pullback is in store. But again, did we need an indicator to tell us that? No, not at all. When things like this happen, you can generally expect a nasty pullback to happen at some point or another. We'll keep drilling down. We'll just go straight to the 5-minute. On the 5-minute, again, the Bollinger Bands are starting to tell us a little bit different of a story. So this is kind of where I think things get a little bit more interesting and where we can formulate a plan for early trade on Thursday and into the rest of the week. So the Bollinger Bands on the 5-minute, again, this is the lower Bollinger Band. We're starting to penetrate it to the downside, which is telling us we're actually getting overextended to the downside. So is this pullback a little too harsh? That's kind of why I was saying on, before we added these indicators back in, that I'm kind of watching for a move back into our resistance trend line for a reshort if that's the play. And the Bollinger Bands are kind of confirming that in the sense that, yeah, we're actually kind of due for a little bounce to the upside given the fact that we're getting a little overextended to the downside. And if we look at the CCI down here, the same thing kind of holds true. We're actually overextended to the downside, trading at negative 247, where normally this thing is kind of range bound, again, like we said, between 100 and negative 100. Especially on a 5-minute intraday chart, you can see it never really gets too extreme. On gap ups and crazy price action, it'll get kind of crazy. But normally, it's just kind of hovering around that negative 100 to 100 mark. So again, another sort of check mark for the fact that it could be possible we see a move to the upside to retest that resistance trend line. In terms of moving averages here on the 5-minute, the 50 SMA is that blue line in there, so that should act as some resistance on any sort of retest and move back up. Of course, to get to that resistance resistance trend line, we will have to battle up through our 36.38 support, which is now resistance because we're below it. But again, if we can get into it, I think it's a good potential short, good risk reward, put a stop loss just above up here, and we're looking for more of a price breakdown to lower targets around 30.78 and then 25.50 ultimately. I would be wary of what happens under that 25.50 just because our next target below is 17.41. It's quite a ways away from where price action is now. But again, with something like this, anything is possible. And then do keep in mind that under that 17.41, and it's a gap fill all the way down to 11.82. And then underneath our 7.74, it's a gap fill down to 2.53. So those are kind of the levels that I want you to be paying attention to. I hope this was pretty informative and gave you some insight into how to trade these crazy movers. You're just going to want to map out some key levels going from a really large time frame down to some more specific time frames, in our case the 5-minute, and then you want to go back in with indicators to either confirm or deny your sort of basis and bias that you come up with. So the trade plan we're looking at, again, just to reiterate it one more time, is sort of a snapback into our resistance trend line for a reshort to go lower. We're slightly overextended to the downside here on the 5-minute, and that ultimately is what we're going to be watching for early on Thursday. So again, if this was helpful, let us know down below in the comments section. Feel free to share it with a friend. If you are someone who is buying up here at 60, again, I would just strongly urge you to get out of the habit of playing these crazy volatile things. Ultimately, you'll be burned more times than you make it out alive. So with that, I wish you good luck trading Kodak the rest of this week. And again, stay green in all of your trading.